In American society, money is a taboo topic. We're taught at a young age it's improper to talk about it, but we're also bombarded with messages about the power and importance of money in our everyday lives. And by not talking about it, we miss out on the skills and lessons we need to effectively understand and financially plan. That changes today. Welcome to Money Tales. Hosted by Sandy Brager and Cami Doder, Money Tales brings more than 35 years of combined professional experience in personal finance to demystify money and demonstrate what it's like to speak openly about personal financial matters. Join us each episode as they interview modern-day movers and shakers about how money decisions intertwine with their daily lives in order to give you better insight into productive financial conversations. Subscribe today and register for our blog Fathom at aspiriant.com/podcasts to increase your money mojo. And now, here's Cami and Sandy.
This episode is all about alternatives. Alternatives to relying solely on your trained career to reach your financial goals, as well as alternative investments to diversify your investment portfolio. Patrick Grimes is our guest this week on Money Tales. Patrick thought he had struck gold with a high-risk, high-reward, pre-development real estate project that promised big returns. But 2009 hit, and instead of achieving riches, he lost it all. The property was foreclosed, the IRS came calling, and Patrick was left to rebuild from scratch. In today's episode, Patrick shares the hard-earned lessons that reshaped his entire financial philosophy to one of cautious leverage and diversification. Let me tell you more about Patrick. For nearly 2 decades, he's been actively engaged in diverse alternative investments that are not correlated to traditional markets, many of which you probably haven't heard of or contemplated before. Patrick has also been part of the author group of 2 best-selling books, Persistence, Pivots, and Game Changers, and Persuasive Leadership.
Here are 3 key money topics Patrick hits on in this conversation. First, how he and his wife navigated cultural divides to have productive money conversations. Second, the importance to him of having non-correlated investments to stabilize his nest egg portfolio. And third, how achieving financial security has allowed his family to lean heavily into their lifestyle values. We hope you share this episode with a friend. Now on to our conversation with Patrick Grimes.
Welcome to the Money Tales podcast. I'm Cami Doder.
And I'm Sandy Brager. Cami, I was in a client meeting last week, and the clients brought up a conversation we had over 3 years ago.
About what?
I'll give you the big picture, which is there was a big family money decision to be made. And that is commonplace for us at Aspiriant. We're involved in a lot of money decisions, a lot of money conversations, and a lot of those happen around big life events. And this particular client situation was related to a relative and some transfer of assets that relative was planning to make. And the clients found themselves really in a pickle. They didn't need to be a recipient of this large gift, but it also felt weird as members of the family for them not to receive anything. They weren't sure what to do. They thought, well, maybe they would accept the money and then give it away to other family members. And it was just getting really, really complicated. I asked a question, which I often ask clients, which is, how will receiving this money change your life? And they thought long and hard. It caused them to pause, and they realized the gift wouldn't change their lives. They're in a very enviable position where they have plenty of financial resources to do everything they want to do. The part that they were grappling with was the family relationships and the dynamics at play in the family, not the monetary value of the gift. So they had decided to just pass on the gift. And that caused a lot of release and a lot of relief at the same time. It's just a release of tension, relief of, gosh, this doesn't have to be so complicated. We'll just say no, thank you. 3 years later, the clients are still talking about that. They remember that question and they were applying it to something else that came up in the context of our conversation during that particular meeting. So I wanted to share that because we talk a lot on Money Tales about the importance of asking questions, of being curious. And that's a really great question to ask when you're in the middle of a really hard money decision. How is this decision? How is this money whether it's going out or coming in, how's it going to change my life? Because that allows you to get off the stage of your life and really go up into the balcony and see things from a different perspective.
Sandy, what an important conversation. Like you said, it released them. I'd love to hear what they might share about their relationship with the family member when they said they're going to pass on this generous gift. Very appreciative. That probably caused another money conversation.
It did create a lot of money conversations because there were other family members involved. I'm happy to report it was beneficial for everyone. Everyone was delighted.
Oh, I love this. See? Keep having those money conversations, even the ones that seem like they might be hard. Might not be. Wow, what a great story, Sandy.
How would that change your life?
How would that change your life? Thanks for sharing that with us. It's my pleasure to pivot our conversation to our guest, Patrick Grimes. It's really wonderful to be speaking with you on Money Tales.
Yeah, I'm glad to be here. You have a really cool show. Looking forward to contributing.
Ah, thank you. We know you will. Would you introduce yourself and share a couple pivotal moments that have taken place in your life that really impacted who you are today?
My name is Patrick Grimes. I'm the CEO, founder of Passive Investing Mastery. We do alternative investments. I came from a hardworking professional career, like probably many of your listeners. I paid a high-tech guy and did machine design, automation, and robotics. And I started investing pretty young. I was told by the founder of the company I worked for, go invest in real estate, take your money out of high tech, make it there and put it somewhere else. And so his only regret was not investing more sooner outside of this tech stocks. And this was kind of a shock to me.
Yeah, that is a bit surprising. What year was this approximately?
2006.
Ah,
Ouch.
I was doing really cool projects with SpaceX, with Johnson & Johnson, Abbott, Lockheed, and just really cool stuff over the years. I was always finding this next flashy object, a startup or whatever. And most of the people I was working with and all these smartest people I ever met had no exposure to any kind of investing outside of the stock market, outside of their 401k. I was just for them and me at the time. None of us had any idea what to do. So I ventured out into this real estate world on my own, pretty much. I was analyzing by night and looking at different assets. And I found what I thought was just a shoe-in attempt at me to make it big. It was a pre-development, super risky. I didn't realize at the time. The people I partnered with had a big track record. Everything looked great. I was going to double and triple my money every couple of years and lost everything in 2009 and 10 during the subprime mortgage collapse. My first attempt at going big quick failed quick. And that was a good thing. I was bruised and battered and ego was hit and it was auctioned off at foreclosure. I had to pay debt forgiveness to the IRS on the forgiven debt. It was brutal, but it taught me some lessons early on. It taught me a lot of lessons about investing and not speculating. It taught me not to go all in one asset. It taught me to use leverage very cautiously and how to allocate into non-correlated alternatives into ones that don't rise and fall together. And so that's really what led me down my future path years later into really focusing on assets that are in different markets that run by different fundamentals and building financial security as opposed to independence in one thing, because that one thing could disappear overnight. And I didn't want to lose my shirt again. I didn't mind losing a button or two, but that's where passive investing mastery came around.
Were you on the pursuit of money for money's sake, or were there spending goals in mind?
The advice I got was you're never going to have the true financial security or create the life for your kids that you would want if you didn't get out of high tech and into all these different alternatives that don't ride the same market swings. I was doing this high tech stuff by day, and then I was doing this investment stuff by night. After my big loss, I was actually succeeding at it, but my goal was to set up a financial future for my soon-to-be wife and family that I didn't have to worry, hey, what if there's another bust next year? I could have allocations into resilient types of investments, but it got in the way of it. I was buying a bunch of real estate and I got a master's in engineering and an MBA and I high income. I was like, where do I spend it? Like a lot of the doctors or dentists or attorneys that invest with us, I felt like I could do it all myself. And I felt like I could compete with the other guys doing it full time. So I actually had to stop to marry my wife. It was interfering with the actual objective of doing it was to create a better life for a wife and family.
Can you say more about that, though? Let me just stop you right there. You had to stop in order to marry your wife because you were just spending so much time investing outside of work?
If I wasn't getting like 2 master's degrees at night, I was traveling for work or working on underwriting and deals and management and contractors. And it was working. I was building a large portfolio of single family properties in recession resilient markets like Houston, but doing it all myself was brutal. So she was actually there at my very last single family closing. I invited her to Chinatown in LA at the time. We were going out to dinner. And I said, look, this is the last one I'm going to do because I just want to take a break and I want to spend some time. 2.5 years, just focused on the wife. We got married in Big Bear in California. We got married in Beijing. I was on a horse with a bow and arrow and she was in a carrier. She had a phoenix on hers and I had a red dragon on my red suit. It was really cool. Such a good time. And our families traveled around. It was the right step. And then when I got back into it, I was like, hey, look, I'm not going to do it like that again. I'm going to learn to partner with others that can help us scale in a way that's healthy with a better work-life balance. Can't control everything. From there, my allocation strategies were very heavily indexed in the stock market, then way over indexed in real estate. Then we got into some oil and gas, and then we got into some debt, private credit, and now we do litigation finance, which are all non-correlated to each other. And it eventually allowed me to leave my high tech career behind, which is where we're at now. And I can do 100% in investing.
Tell us more about the conversations you and your wife were having about money, especially as you were planning to get married and newlyweds.
She was not raised, and neither was I, in an entrepreneurial type family. My dads were pastors, and her dad's a surgeon, and her mom's also a doctor. And my dad became an educator. Until I read the Purple Book and getting advice from others, I really didn't have this entrepreneurship anywhere in my family or really my group of friends. And I had to create that space. Same with her. In fact, her being from China, it is more common that entrepreneurs are not rewarded and there's a lot more dangers. They don't just have bankruptcy and they don't look at failures as much as success as we do here. They reward a bit more of find your place and do your same job. Like her dad's been a chief surgeon of the ICU now. He's walked into that same place for over 35 years, 6 days a week, same office, same place. And that's more traditional in China. And he wanted to be a computer scientist, but his uncle called the school and changed it to a doctor because they wanted a doctor in the family. So you can see that's where my wife was raised, in that kind of environment. And I was raised in a mom calling me, oh, I'm a little bit worried. You're doing some big things. And my wife was like, you get a great engineering job. And I'm like, no, this isn't the end game. This is the path. This is the journey. And so it was tough. And it wasn't all rosy, but on the aggregate, we're winning. And that's what's important.
Patrick, tell us more about that. I think the cultural differences that you're describing are really interesting. You having a cultural difference from your family where you grew up and your wife having a very cultural difference in terms of growing up in a whole different society. How did you guys begin to talk about money in a way that opened up those conversations and unveiled in a transparent way the differences and the concerns each of you might have been bringing to the table?
I actually talk about it. I'll give away a free copy of this book, Persistence, Pivots, and Game Changers, to your listeners at the end. I talk about a lot of that. I actually kept some of it very close to the chest. In fact, a lot of my family and friends had no idea that I was on the side buying up a ton of real estate, working in different investments. I mean, that was like my retirement account. So I was like, it's none of your business. Same thing with my friends. I was worried about alienating. I was worried about jeopardizing my job and how they perceive me at work. So I'm a very talented engineer. I didn't want to get the word out there. I kind of wanted to keep it quiet. With my wife, who actually knew everything, it was a little bit mind-blowing. And my aspirations moving forward were very different. It was actually through a series of events that I brought her along with me to, where we did some boot camps. I love to learn. I'm kind of a geek that way. And she is too. She's brilliant. And she does very successful career at animation producing. She went to Cal Arts, worked at Disney and DreamWorks on feature-length animated films.
The story gets even more interesting because we have an engineer by training and an artist by training.
But then she's so good at math that I'm sitting there underwriting and she's coming up behind me doing the numbers. I think there's a mistake here. It was a slow process of bringing her in the loop, having her to read some of the books that brought me up to speed, go to these conferences that kind of establish and instill these other entrepreneurial type American dreamish message, which was fairly foreign. And then there was one that we went to, and she came home as a result and created a vision board of what our life could be like. And this was before we moved to Hawaii, but it was a long journey. She was so on board that she recorded 80 different passive investor education videos, and she called them the 1 Minute to Cash Flow series. It took a while, but when she got behind it, she really got behind it. Now she's taking care of our boy. And so her priorities have shifted away from, for a short period of time, her arts, and especially my investment business. It's more just our beautiful little boy. And so she gets to be home right now, which is another thing offered by the ability to build wealth in a way that has stability through economic downturns that's afforded us.
Speaking of that, you said you're on average winning with your investments. Describe what winning means to you.
I'm fairly patient, so I'm not looking for the shiny objects, the big, huge wins. There's not a lot of people out there that are really aware of all the different kinds of alternative investments that you can do. There's like a handful of us, and we kind of trade them like baseball cards. Hey, did you know about this ATM machine investment? Do you know about this blockchain deal? Do you know about this gold mining or legal services? How do you lend to attorneys? Because that's one of the most stable industries like education and healthcare that there are, access to those kinds of investments. Some of them are more patient. Some of the returns are a little lower, but they're super resilient. And some undergo some ups and downs. My great-grandfather bought some property and he owns some oil royalties, and the commodities of oil and gas are very cyclic, and they really rise and they really fall. If you're in a truly diversified portfolio that's not in a bunch of different stocks or a bunch of different real estate, but you're allocated into a lot of different recession resilient markets with different underlying fundamentals, even while one is down, like real estate today. Commercial real estate's now dropped below where it did in 2009 and 10 during the subprime mortgage collapse. I still have oil and gas investments cash flowing at 8%. We still have litigation finance, which doesn't matter what happens, that stuff is going to keep going.
It sounds like winning is access and then also diversification, which probably brings peace of mind to you. That's what I think I'm hearing, some peace of mind to you and your family.
Winning is, I don't have to worry when I look at the news about rising inflation because I'm in inflation hedged investments. I don't worry about interest rates collapsing everything or stock market collapsing everything. Winning means I have funds allocated in places where if any one or two even, I'm still okay. And that's when you can sleep easier. And when something lowers, as expected, that's part of the plan. That's part of the plan because some of the investments are counter-cyclical. There are ways in which, on the aggregate, you're always winning. And it's just not a lot that an everyday Joe Schmo type investors have any education towards that or know how to even access those kinds of investments. And that's what I love to do. That's why we have our platform now, is I get to educate on all this stuff I didn't know about. And then the smartest people I knew didn't know about when I was growing up.
Patrick, it sounds like you've really found your calling and that you've dedicated your life toward it, leaving your initial career, which is really exciting. You shared with us how you and your wife were initially focused on your vision for the future, your goals. And it also sounds like there's some values work in there too. You both knew that having a family was really important to you, as both of you have been successful investors and you've been able to build this nest egg for yourselves. How have your thoughts and conversations around your values and your goals and your priorities shifted over the years?
Well, there's this sense of scarcity where you are working a day-to-day job. You could get fired anytime, and maybe you're overspending and you're not getting the reserves. Our values are kind of survival. That's where a lot of people live, keeping up with the Joneses. They're not saving, they're allocating, they're not investing. Or maybe they're investing into something and they can see a map, but then they live in a little bit of fear in the back of their mind that maybe this one thing will crash. And I think once my wife and I got to the point where we weren't just getting like financial independence, where we feared it could topple, we got true financial security across different assets, is when we got to actually start doing things and being things more intentionally, kind of without that underlying fear of losing it all. And with that underlying fear of, will we have enough to retire? Can we go to Disneyland every Monday? When we were living in Orange County, we went to Disneyland every Monday with our boy. It's really cool that we were able to do that kind of thing. And it's cool that I was able to attend every single hospital visit with my wife leading up to the pregnancy. I was able to be involved, would have never have been able to do those things if I stuck out to engineering and I had that as my work until my die strategy. And so the values were shifted. And part of the move to Honolulu, we were spending about half our time here, but that was also a value shift where we're out to dinner and we're like, well, every time we come to Honolulu, we have a really hard time going back. 1 month, 2 months, 3 months, 4 months. One time we were here during COVID for a couple of years. Had a really hard time getting home, to Orange County in Southern California. Why is that? And we were at dinner prioritizing and writing out everything that matters in our lives and ranking them and then scoring them. Honolulu scored so much higher in my ability to spend time with the family because people aren't calling me past 5 p.m. at night because that's 8 p.m. I had what I had on the weekends with every night with the family. I had that every day. That was why it scored really high for me. My wife had other things, but by a landslide, you're able to take your values and actually take action. So here we are permanently now. So been a long journey, but we're now able to make those value choices and take action, to create a situation in which we can live closer and more fulfilled to what matters.
You mentioned the gripping pull of a scarcity mindset, which you're right, inflicts a lot of people. And I'm curious now that you guys have begun to live and really lean into your vision and your values and have created what sounds like a really beautiful life for yourselves. Is the scarcity mindset still there?
I was not raised wealthy, and neither was my wife. We were raised from very working class families. And I'm also a middle child. So I think I happen to be a little bit of a scrapper, independent, make things happen. And I love to take action and learn new things. So I don't think it's a scarcity, but I do feel like I'm still on my journey. I'm still looking for better balances, better allocations, different strategies. And maybe it's just because my brain won't ever shut off working on a problem. And there's never going to be the perfect solution to this one. So I have something to do. It's not scarcity, but it's always that journey. I'm always thinking to myself, hey, what happens if these moves on the chessboard happen? How am I positioned to play the game and win still?
So you really do look at it as a game. This word winning keeps popping up, which is interesting.
Or you can most certainly lose.
And losing for you would be?
Losing everything again. So I have to start over again. I'd be losing.
Thus, your very intentional approach to be very diversified. Patrick, you have a 2-year-old son?
Yep.
What money values do you hope to pass on to him as he grows up?
I was the guy that was working at fast food restaurants for a little bit and server at Outback Steakhouse during college. And then I took jobs at high-tech firms and worked my way through and bought my first car. Actually, the first job I was hired for and fired from was my grandfather's machine shop. And I was sweeping up the chips for $8 a week. And I would buy like a soda for a dime. My family definitely gave me that, instilled early, that work hard, earn something, and you can spend it and make something good for yourself. And that's potentially the first step. And then the second step is how then can you make that money work for you? And we're going to navigate that. I'm looking forward to that. First time parent, so we'll see how it goes.
Patrick, I'm curious, as you learned from the financial crisis and losing all that initial money, building back your business, you say you learned to collaborate with others and work with others. Sounds like another form of diversification in addition to these different types of investments that you're making with different correlations to each other. You're collaborating with other people. Tell us about how those money conversations have gone for you.
By partnering, you can leverage your skills and other skills in different geographic locations with different experts that are operators in different markets and different kinds of assets. It took me a long time. It was like 2.5 years from the time that I stopped doing it and controlling it all myself to actually learn to partner and scale in a more healthy way for my marriage and my portfolio. It took me like 2.5 years before we made that first investment to partner. So it wasn't easy for me, but we got there.
How did you build the trust? That's what I guess I'm curious about. As a person who's used to doing it himself, looking to partner with other people on investments, there's money involved. There's got to be trust and confidence.
Building that sort of know-like trust with different operators, different investment managers, there's a challenge there. There's relationships. My wife and I moved physically for like 3 weeks one time just to be nearby some of these people in some of these markets during COVID, for example, just so that we could get to know them, be in their house, see what their life is like.
It's deep due diligence.
It's been a long journey. I think it takes time, it takes effort. What's happened though is when I put in those times to build those relationships, build the trust, my acquisitions fund right now, I met him like 4 years ago. I spoke at one of his events. And then when he's like, hey, look, let's take advantage of the upside of this downturn. Let's start buying some stuff. Let's partner. We had laid the tracks down over years of relationship building. I say to people, you've got to get out there. First of all, I say like every day, you need to do one passive step where I run in the mornings to podcasts, TED Talks, audiobooks, all about different kinds of investments or inspirational leadership. Do something like that, but start learning about investments. Then do one active step a month. If you can do two, do two. But that means get physically around other people who are doing and thinking like you want to do and think. And that's how it worked for me. Started not only downloading and researching and learning like I was in another master's degree, but I started physically surrounding myself with these other people. And some of the first people I met are now my partners many, many years later.
That patience you're talking about, patience and waiting for that right opportunity.
You just reinforced this, an investment strategy, passive versus active, but you tied it into how you learn. And there's the passive learning, which you do through books and podcasts and whatnot. And then the active learning. I really appreciate the structure and the balance of that both are important. You can't just sit back and listen. You really do have to take some sort of action to continue that learning.
Patrick, tell us, what's your next money conversation going to be and who's it going to be with?
I have the opportunity to have probably up to a dozen conversations a day nowadays with different investors. We have 500 plus investments now. And so I get to have a conversation, which I love to do. And anybody's welcome to set up a meeting and we can chat.
Patrick, where's the best place for our listeners to find you?
PassiveInvestingMastery.com. If you go to PassiveInvestingMastery.com/book, as long as they put in the name of your podcast, we give them a free, I sign them and send them out. It's my way of just to give back. I tell my whole story, persistence, pivots, and game changers. You can also set a meeting up with me on that same website. And I'd be happy, regardless of where you're at, to get you pointed in the right direction. For a stop along the way, that's great. And then we have the Mastery series where we educate on different alternative investments. Happy to have anybody join that. That's also on our website.
Patrick, thank you so much for joining us on the Money Tales podcast.
Yeah, glad to be here. Appreciate you having me.
Thanks for listening to the Money Tales podcast. If you've enjoyed this episode, share it with someone you think would benefit from listening. And leave us a review on your favorite podcasting platform. Your ratings and reviews help more people find our podcast. If you're inspired to gain clarity and peace of mind about financial matters, don't hesitate to reach out to our team at Aspiriant. Go to aspiriant.com/start a dialogue. Or you can email Sandy and me at podcasts@aspiriant.com. See you next time.